Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Phil in Puerto Rico. Hey, Phil, what's going on?
Hey, Tom, doing great. Just wanted to thank you guys and the whole crew. Best content on the internet. Really appreciate everything you guys are doing.
We appreciate you growling and prowling with us out here. Phil, how did you find us?
I just typed in live trading in YouTube one morning.
Cool.
I was looking for any type of live trading room. You guys came up, and
awesome.
I know quality when I see it, or at least I like to think so. And I mean, you guys are just a dream. I appreciate everything you guys do.
Welcome to the Tiger family. We appreciate you growling and prowling with us.
My pleasure.
Now, Tom O'Brien.
Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN, 3:19 p.m. I come to you a little late starting the program. We were airing Chairman Powell, and yeah, we got a little bit of fireworks to the downside. The chairman sounding like he's not quite ready yet to throw in the flag that inflation is over. The markets are thinking that rates might be a little high. He comes in a little hawkish. Let's kick it off with yields. How about that one? For lower price and higher yield. Well, the chairman was talking. You're talking about the 10-year right now. Drives from 111.11 down to 111. Now, we're right where we were at 9:30 this morning. So all things considered, no huge moves. But, yes, we got the 10-year right now at 4.37. Okay, 4.37. And let's take a look at the whole curve. Because, yes, that's going to be the takeaway. You come into it with two descents, right? 2 p.m. Eastern time to kick things off. We get the announcement. The Fed, they leave rates unchanged. There were two descents, the first time since 1993, 32 years ago. Okay, the first time, we'll take a look at that chart as well, that we've had two descents since 1993. We've had one in between then on many occasions. Usually it's unanimous. You take a look at the 2-year right now, up more than 6 basis points, right? That's the biggest move in the whole curve. Let me blow that up so you can see it, folks. Okay, the 2-year right now is at 3.94. You're up almost 7 basis points. The biggest, and that is the biggest movement when you're talking about relying to the Fed, shorter term rates. The 2-year is where you are. And yes, we have higher yield. And what else do you have with higher yields? You got dollar strength. How about that? We almost hit 100. We're at 99.88 on the dollar. And boy, we got quite a bounce going on right now. This move from 110 down to 96.37, a 382 bounce gets you right where you were in May, pushing almost 102 on the 10 on the dollar, and on a longer term basis, 102 is right in the ballpark of just this area that was support for the longest time, 2023 and 2024. We're coming back up to test that area, so we have dollar strength. You have higher yield. And that's a problem for gold. Down by $55 right now, off by 1.7%. You see the action on gold. And you don't want to talk about metals. We're going to talk about copper in a moment. And yeah, as I was sitting here, almost chuckling at, my goodness, just a move. Amazing. Okay, and let's go over to it. Gold trading off the dollar. But this news hitting the press right as Chairman Powell was talking. And I think the sell-off has to do with yields right now. Okay, he came across as someone whose job is not done yet when it comes to inflation. Some of the wording that he used, folks, pretty strong. He didn't have to use the wording. Okay, you get glimpses into his feelings. And part of the ones where he says that consumers are going to pay for part of this tariffs. They're not going to pay for all of it, okay? But they're going to pay for some of it. Let me get the quote. Here we go. What we've seen now is the very beginnings of whatever the effects turn out to be on goods inflation. The very beginnings, okay? The market was reacting to that headline, man, okay? He adds that the effects of the tariffs on the consumer are not going to be zero. They'll pay some of it, period. That's what the market's reacting to, folks, okay? And I like the analysis of a probability greater than zero. I've said it on this program before. When you have something occurring and the probability is greater than zero, you better make sure that you're paying attention to the risks of that occurring. Now, how close are you to zero? Okay, right? They're not going to be zero. Well, you'd say, well, they're going to be they're not going to be zero. Okay, and they're at the very beginnings. Companies will raise prices when and as they can. That's how it works, folks. That's the business they're in. So you get that sentiment. There's more in line there as well. We get 2 dissents. And scrolling down to get to, come on, we got a lot to get to in this 45 minutes of programming in a shortened version as we get Chairman Powell. All right, I'll pull it up. I was looking at dissents. Okay, I'll jump around. That's another article. But let's talk a little bit of copper. So this news hits. 50% universal tariff on copper imports. And yeah, I had the same reaction. Have you ever seen a bar like that? Folks, that's a daily bar, and you just had copper today. God bless the soul that was buying copper today at today's high of 583, because you're trading at 452, folks. That is a daily. As copper just dropped 20%. Right at 2 o'clock, that news hits. Exactly with the Chairman Powell news and the Fed. Imagine, you released that news at exactly 2 o'clock. Let's get the 1 minute and see exactly when it was released. Yeah, literally 2 o'clock. Look at the no movement in copper, and you drop $1.30. I mean, even when you put things on a weekly, you check this out. I was putting it, you put copper on a monthly, okay? You have the movement on a monthly basis that matches almost anything else we've had outside of when copper was cascading lower in 2008, and you do it in a day, folks. And yeah, you want to talk about some volume? You're going to get some volume today, baby. Check this out. So most days in copper, right? This is copper futures. Most days, these are dailies you're looking at here. 22,000 contracts, right? Yesterday, 25,000 contracts. The 15-minute bar at 2 o'clock, you did 17,000 contracts, almost an entire daily volume. Next 15-minute bar, 11,000 contracts. So you have 50% tariffs on copper, the White House says, takes effect Friday. The same day reciprocal tariffs are in there, and those copper tariffs follow the 50% tariffs on steel and aluminum that Trump previously imposed. They're aimed at boosting domestic industries and addressing trade imbalances. Third most consumed metal behind iron and aluminum. And we import nearly half the copper we use. Most comes from Chile. And so the flex is on, and we'll see where we end up. But boy, that throws a little bit of a wrench in things. But I don't think that's what's going on. It's all part of the equation, of course, folks. But pay attention to yields right now, man. Okay, the market I talked about it this morning. The market was pretty sure there was going to be no change this meeting. There was no change this meeting, okay? We have 3 meetings left in the year. The market was pricing in 2 to 3 cuts for the 3 meeting. I think it got over its skis a bit. Okay, maybe it's the Trump rhetoric. Maybe it's the pressure, thinking it was going to happen. Maybe it's the 2 dissents that you've gotten out there. But hearing the chairman's words, in one vein, he's looking for 2 months of data. Okay. And we get some of that data on Friday with the jobs number. So that's going to be an important data point as September's in focus, 2 dissents. But we got the market right now selling off. You had yields higher, and you have dollar strength with the dollar pushing 99.87. And we got Microsoft and Meta earnings today. We'll take a look at those when we get back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. We have the S&Ps right now down by 30 points at 63.76, and you did come into that area in higher territory. We're down almost 55 points from where we were at the highs when Chairman Powell started talking. You had the announcement at 2 p.m. Eastern time. We climbed into the chairman talking, and then, yeah, it was a straight shot lower by almost a full percentage point from the highs to the lows, from 64.30 down to a low of 63.66. So literally almost a full percentage point to the tick in the S&Ps. And on the NASDAQ 100, you had a slide going from 23,589 down about 200 points, 23,356. All right, we jump around to some of the equities. Microsoft shares down about 0.2%. They'll be out with their numbers after the bell. Meta down about 0.6%. We take a look at these on a daily. Microsoft shares. And talking about this one, now the area, 469. If you're looking for a test, that would be the test of last year. But I don't think we're going to get the test, man. Microsoft's been one of the leaders in this market, second most valuable company in the world. And you blow past that B point with volume. Last month and this month, you really break above that B point the week of June 23rd. Let me zoom in on that part of the chart. All right, this whole acceleration. You break out of those highs that you made in about a year ago, July 1st. And yeah, you're talking about a 1-to-1 that brings you up to almost 597. Meta shares, different story. You have a double top here. And we really haven't sold off with volume, though. You go back to the April lows, but you look at the sign of strength Meta had on June 23rd. You trade up to 735, and we've really traded lower on lighter volume. You had some volume the week of July 14th, but nothing too convincing to the downside on Meta shares. Spending going to be in focus, of course, for both these companies coming up after the bell tonight. That was a focus for Google shares, of course, last week. Google, yeah. Google's coming up to this 203 area. That's a small A to B, C to D from the April lows, and that brings you right back to the highs of January. That was some selling on July 24th following their earnings. Let's put this back on. Yeah, look at all that selling you got on that bar following their earnings. Strong numbers, but the CapEx, $10 billion. It's going to be in focus for Microsoft and Meta. So the headlines out there, Powell says we do not have a preset course on rates. You get 2 dissents, which will be the headline. But if you look at the market reaction, folks, we have higher yield, you have dollar strength, and you have the market not liking it. And what's going to save you? It would be enough weakness for them to cut, I guess. And they think they have room. But the problem here is going to be what's the rush? And that's what the market heard. And in the face of 2 dissents, it didn't sound like a committee chairman that was on board with 2 dissents leading to an automated. They're not on a preset path. They have 2 months of data, and the data is going to become ever important. We just hit 99.91. We'll see if we hit 100 by the end of the hour. We got about 24 minutes until the closing bell. All right, we jump around some other equities. UNH catches a lift up by 1.6% right now. Palantir up by 1.4%. Yeah, look at the usual leaders. Robinhood up another 2.6% today. Let's see how the volume's coming in these indices. So we're pushing 3.5 million contracts on the weekly. He did 4.9 last week. We're going to reject that with volume. You know, we're going to have some big days. Because imagine, we got Microsoft and Meta coming out today. They're going to digest their earnings tomorrow. You're going to have Apple and Amazon on Thursday after the bell. Market digesting their earnings with non-farm payrolls on Friday. So this is going to be a big week in the S&Ps. And on a weekly basis, you take out these lows, you do it on volume, you might be heading back to test this 6,000 price point, which, you know, folks, all that's doing, okay, if you've been listening to the program, we had a tremendous amount of volume that got ahead of the market selling off on Liberation Day. We've seen nothing like this volume in the futures, right? We talked about it for some time. You had every single day in the market trading a minimum of 1.8 million contracts, and on most days trading 2.5 million contracts. And then you really fell out of bed on April 2nd. Well, all we'd be doing is testing the beginning of that area. We wouldn't even get into that area. That's 6,000. Right now we're at 63.73. You can see, even on yesterday, we're doing about 1 million contracts. And as I mentioned, we're at 3.5 million contracts right now. Today's a big day in the market. We're probably going to come in at 1.2 or 1.3 million for the day. And then you got 2 days of trading left, and they're going to be big trading days. So we're going to have some volume this week, and on a weekly basis. Let's check out the NASDAQ. Yeah, not quite the same with the NASDAQ. We're at 1.3 million on the weekly, and you did 2.6 million last week. But guess what? You'll get some volume following the earnings tonight. All right, we have S&Ps testing the session lows. You jump over to yields, sitting right at 111 right now. Check out copper. Oof, pushing lows, 453. My goodness. Yeah, gold's not stopping either, man. You know, folks, Patience is everything sometimes. This gold market right now, okay? Have some patience. This has been quite a run. It's very tempting, but have some patience. Because we got a rollover in the futures, okay? And if we had not gotten a rollover in the futures, this price on the continuous contract would be more at about 32.69. You would be about to break records on a spot basis going back 2.5 months. Not records, but you're about to break lows, right? But we got a rollover in futures, which is this gap here. That's basically just the future value of the 90-day rollover that you get on those futures quarterly contracts. But yeah, gold down by 61 bucks. They're hearing the chairman. The market's reacting. And you better be listening, folks. Dollar strength, higher yields, gold weakness, S&P right now trading lower. We're coming right back. Don't go away. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. We have a Federal Reserve, leaves rates unchanged, and Chairman Powell sounds a little bit hawkish, sounds a little bit hesitant to bring the cuts. He talks about data dependency. If you're looking for those cuts in September, what I'll say to you is, why would he say anything else? Why not underpromise and overdeliver, right? He's got 2 months of data. He'd be a fool to say anything else. So to say that we're definitely going to get higher rates in this hawkish Fed, that's not what this was, in my opinion, okay? There's a possibility that we do. Those statements about what the consumers are going to pay, right, and the beginnings of goods inflation, tariffs, the impact is going to be greater than zero, etc. But why would he say anything else when he gets 2 months of data and he gets to decide? But guess what? The market's in the short term. In the short term, the market did not get what it wanted. That's the other side of that. And we get the jobs number on Friday. So we'll see where the market and the data aligns on Friday. It's going to be an important jobs number. We got private payrolls today. Good number. Okay, above 100,000 off a negative number yesterday. But we have a trade lower. You jump over to yields right now. The 10-year down about 11 ticks. That's the 10-year. You take a look at the 2-year. It's a large move on the 2-year, man, from 103.21.5 to 103.17. Almost 5 full ticks. Now, how quickly the price of where this market is pricing cuts moves quickly. Now, we talked about today, and we pulled this up this morning. And if you're watching this morning, the market was pricing at about a 60-40 probability. All right, even let's just go right here. It says a day ago, it gives you the probabilities. 1 day ago, this is the next meeting in September. Okay, September 17th, their next meeting. A day ago, it was almost a 2-to-1 probability that they were going to cut. Now, it's a likelihood that they do not cut. Now, again, we get 2 full months of data. This data moves violently, okay? And I say that, look where we were 1 month ago. 1 month ago, the market only gave a 5% chance that the Fed would not cut by then. The market was pricing in a 1 in 5 probability 30 days ago, 31 days ago, 30 days ago. 30 days in June, 30 days ago. That we would get 2 cuts by next month, and now the market thinks there's only a 45% chance we get 1 cut in 30 days. You're going to see these probabilities potentially move in the same way in the next 30 to 45 days because that's how long you have for the next Fed meeting. 2 full months of data, but yes, a quick move to say the least, and then you go into the December meeting and you see the same type of movement, right? The December meeting, yesterday, the market was expecting 2 cuts and maybe a 20% chance we get 3 cuts. 3 cuts by December is not happening, folks, unless this economy just falls out of bed. And that doesn't look like that's going to happen in the data. Right now, the market is almost split evenly between 1 and 2 cuts, with 1 being the biggest price in, and that is for end of this year, December 10th meeting. Seems reasonable. And the data is going to be important, and we get some of that data on Friday. And you're going to get some of the market data tonight after the bell. Microsoft right now down by $1.40. We check in on NVIDIA. Hits a new all-time high of almost $180 this afternoon, I should say, before the Fed pushed this market a bit lower. Yeah, AMD up another 0.7% right now. Not Intel, down 0.8%. And again, an equity like this, you can't find a bid on this just yet, folks, okay? And I say just yet, it's not guaranteed that you do find a bid. But if you're ever trading an equity like this, okay, if you're a believer in Intel, set your stop. That's what I just encourage you to do. Okay, you got a nice technical area here around $20 that you've built a support floor. Set your stop. You want to go as low as giving it all the way down to the lows of the April lows, then go for it. But set your stop. Okay? Because what often happens is you break this level, where do you go? Well, I don't know. Because you break that level, the only place on this chart is $11, and then it's 0 for all intents and purposes. And you've already traded from 70. But yeah, you do have a little bit of a floor building here, right at a nice round number of $20. Dell shares coming up to this high area of 140 last year. Let's take a look at the volume on Dell. All right, Dell accelerates on July 18th to 131.99, and you're above that area on lighter volume. Be careful on this one. All right, look at this lighter volume. You're trickling higher here. down by 0.5% today for Dell shares. It's been quite a run, folks. You've doubled almost in share price from 66 to 132. That's an exact double, is it? Oh my goodness, it is. It's more than a double. Wow. Folks, equities double in size all the time in that time, but not often when you're talking about companies that are valued at, I mean, Dell's only 90 billion. I say only 90 because then you look at NVIDIA, and NVIDIA's added more market cap in the last 4 months than probably all but a few companies even exist. And it's been a one-way trip with a few trades lower to the red. A 382 pullback brings you back to basically the highs at the beginning of the year, and at some point you're going to have a pullback in these equities, folks. You know, NVIDIA is the leader. They deserve to be the leader, but in the same way, look at the volume, okay? Watch, I'm going to zoom in from here. You know, you can benchmark it, but we have a series of lower volume, okay? That volume that you did on Friday on NVIDIA, that was the lowest volume day since May 9th and one of the lowest volume days of the year so far. And that's the kind of volume that we're beginning to get in this market and some of the leaders. Doesn't mean that you can't trade with dramatically higher price. We're doing it today again. But at some point, I'm just looking for a reasonable pullback in this market right now. And the volume is something you want to keep your eye on because we should start seeing some spikes above this trend. And it's going to be important to see which way the market is spiking as you start to get some volume coming back. I mean, look at this. This is the first time that we've had 3 red bars in a row since we traded. Well, you did it once following the acceleration in April. In more than 3 months, you haven't had 3 consecutive red bars. Meanwhile, we've had 6 red bars. How many in a row? 7 consecutive greens here. 6 consecutive greens here. 3 consecutive greens. 9 consecutive greens, 3 consecutive greens, 5 consecutive greens. I think we have a little bit of a mean reversion, folks. You're getting a little bit of a bounce right now. And keep your eye on yields in the dollar, because that's what the market's reacting to right now. All right, NASDAQ gets it back, though. Traders getting ready. They're getting ready for Microsoft. They're getting ready for Meta, folks. Markets in the red. We got some volatility. 10 minutes left to go until the closing bell. I got one more segment. Come on back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got 5 minutes left to go until the closing bell, and you got markets clawing back some of the losses. You got the S&Ps right now down just 20 points. And yeah, we got a nice bounce going. We're about 20 points off the lows. We're at 63.86. NASDAQ 100 back in the green. NVIDIA, the biggest company in the world, up by 2.2%. Man. I mean, you're talking about just today alone, they added almost $100 billion in market cap. They have almost 25 billion shares outstanding. They're up $3.40. What's that? 87? No. Yeah, 87 billion, something like that, market cap add. Poof. All right, so Microsoft, Meta after the bell, and we got a request to look at Johnson & Johnson in the YouTube Tiger's Den. So, as I go through this, you take a look at this equity. Now, I'm going to take this one off. You take a look at this equity right away. I mean, you talk about it. Sometimes I say it's as simple as this, folks. You got a high out here, 169.99 in March. Okay, you rip lower for April. And we're coming back into that area. That's the important test. And you just almost rejected it. We did to the penny. Look at that. 169.99. How about that? To the penny. We hit it on July 24th. Now, you take a little bit of a bigger picture look at this, okay? And I think it lines up with the downtrend channel. And that's going to be a little bit lower when you set that line where it is. Not an exact science, but you can see these lows and these highs. Now, you're coming up here. You break this area. Yeah, maybe you come back, you let it test this 170 area on some lighter volume. Well, you look at this equity, you accelerate higher the week of July 14th. You do that on earnings, 60 million shares. And last week you trade higher on 40 million shares, and we're trading into 47 million shares and 47. So you need more volume. And watch those channel lines. But it's looking strong. But anytime, you know, you're at the top of the range, you're at the top of the channel, so look for that test on volume. And markets clawing it back. We got Microsoft and Meta after the bell today, folks. Have a great night. Have a safe night. Thanks so much, folks. And we'll see you tomorrow morning at 9 o'clock for the morning market kickoff. Have a great one, everybody.
Building wealth